What if a single digital asset could, not just change the game, but completely rewrite the rules of global finance? Seriously. What if it went from being, well, a niche altcoin to maybe becoming the actual backbone of our economic system, skyrocketing to a value that's honestly almost unimaginable today? Today, we're doing a deep dive into exactly that, an extraordinary moonshot scenario, XRP potentially reaching $10,000 per token. And look, this isn't just about some wild price prediction. It's about exploring a whole vision, one that could fundamentally reshape global finance as we know it. We're talking about impacts on everything from how giant banks operate to, how you might send money to family overseas. So for this exploration, we've gone through a lot of material. We've compiled research, insights, detailed analysis from various reports on Ripple's roadmap, the technology itself, plus the latest regulatory updates around XRP, which are crucial, and of course, the bigger picture of global market dynamics. Our mission today, pretty clear. We want to unpack this audacious claim, explore what it really implies, and try to figure out, is this a realistic future unfolding, maybe slowly, or is it just, well, potent hopium for the believers? We'll look at the fundamental drivers, why proponents think this could actually happen. We'll look at the huge challenges it faces. And importantly, what would a change this massive truly mean for you, for finance, for the whole crypto world? So whether you're a seasoned crypto pro, maybe you followed XRP for years, or perhaps you're a finance professional trying to grasp these disruptive techs, or maybe you're just curious about the future of money. This deep dive, we've designed it to give you a shortcut, a way to understand one of the most talked about and, yeah, often controversial digital assets out there. Ready? Let's get into it. 1. Untacking the $10,000 XRP vision, the ultimate financial overhaul. Okay, so $10,000 per XRP token. That figure, it's staggering, right? It immediately makes you rethink the entire scale of global finance. It's not just a price tag. It suggests a totally new financial paradigm. So, expert, what's the vision here? What's the grand ambition that Ripple has that they believe could justify this kind of valuation? How could it re-engineer how money moves?
Well, it's fascinating because that $10,000 figure, while definitely, way out there, it isn't just pulled out of thin air by online hype. It's actually deeply rooted in Ripple's core ambition, their grand plan, which is to position XRP as the essential backbone, the core plumbing, as some sources call it, for global cross-border payments. This means providing the critical liquidity, the settlement rails that would basically underpin the whole international financial system.
Okay, core plumbing, so replacing the old pipes, essentially.
Exactly. Our research, and this includes reports from major financial institutions, consistently points out the serious limitations of the current systems. Take the traditional SWIFT network.
Yeah.
Everyone uses it, but it's notoriously slow. It can be incredibly costly and often pretty inefficient, especially for international stuff.
Right, I've heard horror stories, waiting days for money, fees piling up.
Precisely. One analyst we looked at, they had a great description called a digital snail mail. They pointed out that interbank transfers can easily rack up 3 to 5% in fees, sometimes more, especially for smaller amounts or like less common currency pairs.
Wow, 3 to 5% adds up fast.
It really does. And maybe more importantly, these transfers often take 3 to 5 business days for final settlement. Some economists estimate this ties up billions, maybe trillions, in trapped capital globally. Just money sitting idle in transit. It's a massive friction point for businesses and for individuals, too.
Okay, so that's the problem XRP is aiming to solve. How does it do it?
XRP offers a direct and potentially very powerful solution. Its inherent design, the XRP ledger, allows transactions to settle in just seconds. We're talking like 3 to 5 seconds, according to Ripple's own metrics.
Seconds versus days. That's
Exactly.
huge.
It is. And the cost? A tiny fraction of traditional methods, like fractions of a cent per transaction typically. So this isn't just a small upgrade. It's not just making the old system a bit faster. It's a potential overhaul. It bypasses many of the intermediaries, the correspondent banks, the pre-funding requirements that slow things down and add cost.
Okay, that makes sense, bypassing the bottlenecks.
Right. And if we think bigger picture, especially with central bank digital currencies, CBDCs, seemingly on the horizon, XRP could potentially play a really crucial role as a bridge currency.
Bridge currency, how would that work?
Well, imagine different countries launching their own digital versions of the dollar, the euro, the yen, whatever. There's a real risk you end up with a fragmented system where these different CBDCs can't easily talk to each other. You can't seamlessly swap a digital dollar for a digital euro instantly.
Ah, okay.
Oh.
Like different walled gardens for money?
Exactly. XRP could step in as that neutral, instant, low-cost intermediary. It could facilitate seamless exchange between, say, a digital yuan and a digital pound, without needing complex, slow, bilateral agreements between every single central bank. It acts like a universal translator or adapter for digital money.
That interoperability piece sounds incredibly important if CBDCs become widespread.
It really could be. And this vision also has potentially massive implications for financial inclusion. Think about the billions of people, especially in emerging markets, who rely on remittances, money sent home from family working abroad.
Yeah, that's a huge global flow of money.
Huge. But traditional banking often throws up barriers, right? High minimum balances, needing official ID, needing a physical bank branch nearby. These are impossible hurdles for many unbanked people. Our sources show how XRP, by enabling potentially instant transfers directly to simple mobile wallets, could bypass a lot of these legacy banking issues.
So someone could get money instantly on their phone, even without a traditional bank account.
That's the idea. Imagine a family in a remote village. Maybe they used to rely on expensive cash pickup services that took days, or informal networks. With something like XRP facilitating the transfer, they could potentially receive funds almost instantly, directly, and for incredibly low fees, maybe just pennies.
That would be life-changing for millions.
Absolutely. It dramatically cuts costs, speeds up access to capital, it puts more money directly into the hands of people who need it most, boosts local economies, improves lives. So it's not just about making banks more efficient or profitable, it's also about enabling access, reducing that friction, and kind of democratizing financial services for populations often left behind by traditional banking.
Okay, so if this whole moonshot scenario actually played out, XRP wouldn't just be another crypto, another altcoin.
Not at all. It would completely transcend that status. It wouldn't be seen primarily as a speculative asset anymore. It would become that fundamental core plumbing of global finance. Essential utilitarian infrastructure, a bit like how the Internet Protocol, TCP/IP, provides the basic infrastructure for communication online. You don't really think about it, it just works underneath. XRP, in this vision, would be embedded into the very mechanics of how money moves globally, an essential utility, not just a tradable commodity, a critical layer for the whole global economy.
Wow, that is quite the vision, a fundamental utility layer. Okay, quick pause here. If you're finding this deep dive valuable, and we hope you are, we'd really appreciate it if you could take just a second right now. Hit that like button, subscribe to the channel if you haven't already, and maybe turn on notifications. It genuinely helps us out a lot. It boosts our visibility in the algorithm, it supports what we do here, and it lets us keep creating this kind of hopefully quality crypto content for you. It's really how more curious minds like yours can discover these conversations and join our community. Your engagement honestly makes a huge difference. Okay, thanks for that. Now, let's get back to the moonshot. 2, the catalysts: regulatory clarity, institutional adoption, and ecosystem expansion. All right, so building on that idea of XRP becoming this core plumbing, one of the biggest things that needed to happen or start happening was on the legal front, right? Our sources really hammer home the importance of the Ripple versus SEC lawsuit. Expert, can you elaborate on why that case was just so monumental, not just for XRP, but maybe for the whole crypto industry, and what did it mean for institutional adoption?
Oh, absolutely. That Ripple versus SEC case was truly a landmark event. It tackled head-on the fundamental question, is XRP a security under U.S. law? For years, this regulatory uncertainty just hung over XRP like a dark cloud. It really deterred major financial institutions, the big players, from seriously engaging with it. They were worried about legal blowback.
Yeah, that uncertainty kills innovation, especially in regulated industries like finance.
Exactly. So the outcome, specifically that summary judgment back in July 2023, was incredibly significant. The court ruled that XRP, when sold on secondary markets like exchanges, is not a security.
That distinction is key, right? The secondary market sales.
Very key. It wasn't a blanket declaration covering all crypto or even all XRP sales, like Ripple's direct sales to institutions, which the court viewed differently. But for the vast majority of XRP trading and holding, it provided an unprecedented measure of regulatory clarity, specifically for XRP within the crucial U.S. market. And that kind of clarity has been incredibly scarce in the crypto space, which is often, let's face it, pretty ambiguous legally.
It's like trying to build on quicksand versus solid ground.
That's a perfect analogy. Think about how hard it is for any big player, especially traditional banks operating under strict compliance rules, to work in a legal gray area. Uncertainty stifles adoption. So this newfound clarity, even with its specific nuances, it really reignited those adoption narratives for XRP. It significantly reduced the legal and operational risk that had previously scared off institutional players. It provided that firmer, more predictable ground for potential partners to actually consider integrating XRP, paved the way for more confident exploration.
So it was a signal. A green light,
It's a
maybe.
very important signal, yes. A potential turning point in how digital assets might eventually be regulated and adopted by the mainstream. And reports after the ruling did show, anecdotally at least, a notable uptick in financial firms openly talking about and exploring XRP again.
Okay, so that regulatory clarity laid a critical foundation. Essential. But a foundation isn't the whole building, right? What do our sources tell us about the actual construction, the real-world adoption, especially from these big institutional players? Clarity matters, but where's the conviction? Where are the use cases taking hold?
That's the next critical piece, absolutely. Where the rubber meets the road, as they say. Clarity clears the path, but you need someone to actually drive down it. And we can see parallels in how institutional players have already started to impact other parts of the crypto market. Think about MicroStrategy, for example, and their massive Bitcoin treasury strategy.
Right, they went all in, put billions on their balance sheet.
Exactly. That wasn't just a small speculative bet. It was a public, multi-billion-dollar commitment by a listed company. That signals real conviction. It sends a powerful message to the market, to other corporations, showing belief in the long-term value of these assets beyond just trading.
So are we seeing similar conviction, maybe less dramatically, but directionally, towards technologies like XRPs from traditional finance?
We are seeing movement. Even the big traditional banks, who are usually very cautious, are actively exploring and even implementing blockchain solutions for payments. Look at JP Morgan's JPM coin. It's essentially a stable coin designed for instant blockchain-based transfers between their institutional clients.
Okay, but JPM coin is different from XRP, isn't it? It's more of a private system.
It is very different, and that's a crucial distinction our sources highlight. JPM coin runs on a permissioned blockchain. Think of it like a private club only approved institutions can join and validate transactions. They maintain control. XRP, on the other hand, operates on a public permissionless ledger. Anyone can participate. Anyone can run a validator. Theoretically, it's open.
So a philosophical difference too. Centralized control versus open access.
Precisely. And that's a key debate about the future of finance. Permission chains offer control, which banks like, but permissionless ones offer potentially greater neutrality, openness, and maybe censorship resistance. But the key takeaway here is that the fact that even the most conservative giants like JP Morgan are embracing any form of blockchain for payments, even a private one, shows a massive industry shift. They recognize the potential of the underlying technology that XRP also leverages. It's not a question of if blockchain will impact payments anymore. It's more about how and which solutions, permissioned or permissionless, will ultimately dominate.
Okay, so the trend is there. How does XRP specifically stack up against, say, the current best effort from the traditional system, like Swift GPI?
Right. Swift GPI global payments innovation was Swift's attempt to modernize. It did bring improvements like better payment tracking and transparency compared to the old system. But fundamentally, it still faces inherent limitations compared to what XRP offers, at least in theory. GPI often still relies on those complex chains of correspondent banks across different time zones. This means multiple potential fees from various intermediaries. It often still requires banks to pre-fund accounts, these nostro vostro accounts in various currencies around the world, which ties up huge amounts of capital.
Right, that trapped liquidity problem we talked about earlier.
Exactly. And while GPI is faster than the old Swift, settlement can still take hours or even days for finality in some cases. It's not instant. This is where XRP's specific advantage really comes into play, particularly with Ripple's on-demand liquidity, or ODL product.
ODL, that uses XRP directly, right?
Yes. The idea is a bank doesn't need to pre-fund an account in, say, Mexican pesos to send a payment there. Instead, they can use their US dollars to buy XRP instantly, send that XRP across the ledger in seconds to a partner in Mexico, who then instantly sells the XRP for pesos and makes the final payout.
Ah, so XRP acts as that real-time bridge, eliminating the need to hold foreign currency.
Precisely. ODL aims to provide on-demand liquidity, using XRP as the intermediary asset. This model potentially eliminates the need for those pre-funded nostro accounts, freeing up potentially billions in capital for banks globally. It offers a practical, potentially much more efficient and cost-effective solution for cross-border payments. It's solving a real, tangible pain point that banks and businesses deal with every single day.
And the cost savings could be significant.
Potentially very significant. One report we looked at from a major fintech consultancy projected potential cost savings of anywhere from 40% to maybe even 70% for certain cross-border payment corridors using ODL compared to traditional methods. That gets attention.
40 to 70%.
Yeah, that would definitely get attention in boardrooms.
No question. It highlights the practical problems XRP aims to solve for the existing financial infrastructure.
Okay, so payments, clearly the main focus, the flagship use case for XRP. But the underlying tech, the XRP ledger, our sources suggest the vision goes way beyond just transactions, right? Could you expand a bit on these broader Web3, maybe ecosystem implications? How could that drive more adoption and maybe cement its role beyond just being a payment coin?
Absolutely. That's a really important dimension. While payments are, front and center,
Hmm.
the vision for the XRP ledger itself is much more expansive. And if you connect this to the bigger picture, widespread adoption of the ledger for various uses could really solidify crypto's role in global infrastructure, moving it beyond just speculation into actual essential utility across a much wider range of applications.
So what kind of applications are we talking about? Well, several sources highlight the potential for broader Web3 functionalities. Think about NFTs, non-fungible tokens. On the XRP ledger, NFTs wouldn't just have to be digital art. They could represent ownership of real-world assets.
Tokenized assets, like putting a house on the blockchain.
Exactly. The XRP ledger is capable of hosting tokenized assets. This could allow for fractional ownership of things like real estate, fine art, rare collectibles, maybe even intellectual property rights. Imagine a large apartment building tokenized, with each token representing a tiny share of ownership.
Okay, that opens up investing in things that are normally really illiquid or require huge capital.
Precisely. It could democratize investment, allowing smaller investors into markets previously only open to the wealthy. It could increase liquidity for assets that are traditionally hard to sell quickly. And it could streamline ownership transfers. Imagine selling your fraction of that building almost instantly, securely, recorded immutably on the ledger. You could potentially buy a tiny piece of a famous painting as easily as trading a stock.
Wow. Okay, that's a big shift. What else?
Well, the XRP ledger also supports, or is enhancing support for, smart contracts. These are self-executing agreements, right? The terms are written directly into code on the blockchain. This opens up huge possibilities for decentralized finance, or DeFi applications. Things like automated lending platforms, decentralized exchanges, insurance protocols, all running without traditional intermediaries.
So DeFi on the XRP ledger.
Potentially, yes. It could also revolutionize things like supply chain management, creating transparent, tamper-proof records of goods moving from factory to consumer, or digital identity solutions, where you control your own data and grant access selectively, leveraging the ledger's speed and security. Basically, any application that needs secure, fast, transparent, and immutable record-keeping could potentially leverage the XRP ledger.
So imagine a future where maybe your house deed is a token on the XRPL. Instant transfer, no month-long closing process.
That's the kind of future this technology hints at. Or your art collection, tokenized. Maybe even things like voting rights in a DAO or a company, represented securely on the ledger. This kind of broader adoption would transform XRP and its ledger from just a payment tool into a versatile, programmable platform for a whole ecosystem of digital assets and services. It really reinforces that moonshot idea. If this happens, XRP becomes a fundamental building block of a new digital economy, integrated far beyond just cross-border payments.
3, the reality check. Market dynamics, liquidity, and investor considerations. Okay, this all sounds incredibly ambitious, potentially revolutionary, but let's bring it back down to earth a bit. Let's talk numbers. The sheer scale required for this $10,000 XRP moonshot. Expert, this is where the market cap math gets, well, frankly, mind-bending. If XRP hits $10,000, what does that actually imply for its total value? And how does that stack up against the real giants of global finance, gold, money supplies? How do our sources frame that scale?
Yeah, this is absolutely where we need a reality check. It's crucial. So let's do the math. If XRP reaches $10,000 per token, given its current circulating supply, which is around 55 billion XRP, we're looking at a total market capitalization of, wait for it, $550 trillion.
$550 trillion.
Correct. $550 trillion. And to put that number into perspective, it's not just big, it's astronomical. It would make XRP by far the largest single financial asset class in the entire world.
Okay, comparisons needed. How big is gold, for example?
Right, gold. Humanity's store of value for millennia. The total market value of all the gold ever mined is estimated to be somewhere around, let's say, $13 to $14 trillion currently.
So XRP at $10 would be roughly 40 times bigger than all the gold in the world.
Roughly, yes. About 40 times the value of gold.
Okay. What about, say, the U.S. money supply?
Good comparison. Let's look at M2 money supply for the United States. That includes physical cash, checking accounts, savings, money markets, basically. Readily available money. That's currently in the ballpark of $20 to $21 trillion. So XRP at $550 trillion would dwarf the entire liquid money supply of the world's biggest economy by more than 25 times.
Wow. Okay. What about the actual market it's trying to disrupt? Global payments, FX settlement.
Right. Global foreign exchange, or FX settlement. Daily trading volumes are huge, trillions per day. But the total annual settlement volume of all global cross-border payments is estimated in the tens of trillions, maybe low hundreds of trillions over several years, but not $550 trillion in market cap value needed instantly. For XRP to justify a market cap implied by a $10,000 price, it wouldn't just need to capture a slice of these markets, it would need to capture a significant, maybe even dominant share of colossal global financial flows. It would essentially mean the market views XRP as comparable to, or even better than, gold as a store of value, or that it's become a core component of global money supply itself, or that it is the primary rail for almost all cross-border value transfer.
So when you hear those comparisons, gold, USM2, global FX, you really have to ask yourself, listener, does $10K feel like a logical evolution given the tech shifts? Or does it feel like an almost impossible leap?
It forces you to grapple with the true magnitude of what $10,000 XRP really represents, not just a crypto asset, but a foundational central pillar of the entire global economy, re-architecting how value moves on Earth.
Which brings us right to the next critical question, a practical one. Can XRP actually handle that? Trillions in daily settlement volume. That kind of market penetration implies an unbelievably robust and maybe most importantly, highly liquid network. Our sources kept bringing up on-chain liquidity depth. Expert, what exactly does that mean and why is it so vital for this moonshot?
This is absolutely paramount, liquidity depth. On-chain liquidity depth basically refers to the market's ability to absorb large buy-or-sell orders without causing the price to swing wildly. Think about it simply. If a huge bank needs to move, say, $500 million worth of XRP right now to settle a payment, if the market doesn't have enough depth, meaning not enough willing buyers and sellers at stable prices right around the current price, that single huge transaction could crash or spike the price instantly, maybe by 5%, 10%, even more.
Okay, and no institution wants that kind of volatility when they're just trying to make a payment. It defeats the purpose of efficiency and low cost.
Exactly. It makes the system unstable, unpredictable. It undermines its core utility as a reliable bridge asset. You can't have your settlement currency dropping 10% halfway through the transaction. So building that kind of deep institutional-grade liquidity is essential, and it depends on several key factors.
Like what?
Well, first, institutional custody is important. Having large regulated institutions securely holding significant amounts of XRP adds stability and signals long-term commitment. But even more critical is widespread banking partnerships. Real integration, where traditional financial institutions are actually using XRP, maybe via ODL, for their day-to-day real-time payments and settlements.
So the actual use creates the liquidity.
Precisely. As banks and payment providers routinely use XRP for these settlements, they would constantly be placing buy and sell orders on the market. This creates natural, deep, continuous pools of liquidity. It ensures that large volumes can flow efficiently with minimal price impact, minimal slippage.
So it's not just about the total number of XRP tokens out there. It's about how many are actively and accessibly trading hands between major players.
Exactly. It's about active and accessible liquidity, driven by real utility, primarily from these regulated players. Establishing these deep, stable liquidity cycles is absolutely fundamental for XRP to function as that efficient, low-cost core plumbing. Won. Without it, the dream of a $10,000 XRP acting as a global settlement layer. Well, it stays largely theoretical, maybe an aspiration, but not practical reality. And consistently, the financial analysts whose reports we reviewed flag liquidity as probably the single biggest practical hurdle for any digital asset aiming to become a global payment rail.
Okay, that makes perfect sense, a huge hurdle to overcome. So let's shift focus slightly. What does all this mean for investors, for traders looking at XRP today or tomorrow? Expert, if this moonshot somehow happened. $10,000 XRP. It represents an almost unimaginable wealth transfer to people who got in early. That's undeniable. But our sources are really clear about the need for balance, right? Traders, investors, they need to weigh the incredible hype around these huge price targets against the actual fundamentals, the real utility, the realistic market growth. Can you talk about that balance and maybe touch on whale movements?
Absolutely. That potential for unimaginable wealth transfer. It's a powerful draw for any investor, isn't it? Investing a relatively small amount today and seeing it multiply thousands of times, the allure is obvious. It fuels a lot of the excitement. However, our sources consistently, almost universally emphasize the need for that crucial balance.
Investors have to carefully weigh the hype, the excitement around huge targets like $10K against the underlying fundamentals, the actual proven utility, the realistic path for market growth and adoption.
So distinguishing the signal from the noise, the hope from the reality.
Exactly. It's this constant tension between what some call pure hopium, that intense, often emotional belief in a massive price surge driven mainly by speculation and community narratives, versus a more calculated risk assessment based on tangible developments, network effects. Is it actually solving a problem? Is it being adopted? For any asset to command a $550 trillion market cap, its value has to come from profound, widespread, indispensable utility, not just from people trading it back and forth hoping the price goes up.
Utility has to drive that kind of value.
So you really have to ask yourself, and be honest, do you think XRP could realistically hit $10,000 based purely on its fundamental utility and projected adoption within the global financial system? Or is that target primarily fueled by hope and speculation, the hopium? It demands critical self-reflection.
And what about these whales? How do they fit into this picture?
Right, whale movements. It's important to touch on that. These are the actions of large holders, big institutions, early investors, maybe even Ripple itself. In a market where a $10K target implies such an astronomical valuation, the actions of these whales, buying, selling, holding large amounts, using it for utility, have a disproportionately large impact.
Their movements can create waves?
Huge waves. For instance, if major banks do start using XRP extensively for ODL and holding it as operational capital, their consistent buying pressure and transaction flow would create stability. It would drive organic, utility-based value. That's the positive whale effect. Conversely, if a few massive early holders decide to cash out their enormous positions, maybe because they don't believe in the $10K target or just want to diversify, their selling could create extreme volatility. It could potentially undermine confidence and crash the price, regardless of underlying utility.
So understanding who holds the tokens and what they might do is key.
It's very key for navigating the market, especially when these extreme price targets are being discussed. Investors need to look beyond just the price chart and consider the whole ecosystem, including these major players. It really brings home the difference between speculative trading hoping for a pump versus long-term investment based on fundamentals. True adoption by institutional whales for utility would be a sign of the latter. Retail-driven hype alone might signal the former. It's crucial to distinguish between the two when thinking about something as extreme as $10,000 XRP.
Wow, okay. This deep dive has certainly covered a lot of ground, hasn't it? We've really explored an extraordinary, ambitious vision today. We went deep into the $10,000 XRP Moonshot idea, unpacking Ripple's vision for essentially a new global financial architecture. We looked at how critical regulatory clarity was, especially from that SEC lawsuit outcome, in just paving the way for institutions to even consider it. And then we really tried to grapple with the staggering market implications, that $550 trillion number, the comparisons to gold and money supplies, the absolute necessity for immense liquidity, and the influence of those big players, the whales.
It's a lot to take in, from potentially disrupting the old, slow, costly SWIFT system to maybe enabling seamless interoperability between future CBDCs, and the potential for fostering genuine financial inclusion for billions around the world. The potential impact if XRP were to actually become a core global financial utility is undeniably immense. It paints a picture of a future where value moves fundamentally faster, cheaper, and more efficiently across the entire planet.
It really does. This kind of deep dive, it really pushes you to think about the very fabric of money, doesn't it? The future of finance itself. It makes you consider possibilities beyond just tweaking the current system. So here's a final thought, something to maybe mull over after this conversation. If XRP did truly become that backbone, the core plumbing for international transactions, maybe even the bridge for CBDCs, it raises a really important question for you listening right now. Would you actually trust this new system, this blockchain-powered finance with XRP at its heart, more than you trust traditional banks today?
It's a fascinating question. Or would new concerns arise? Maybe new questions about potential centralization, even within a decentralized system.
Yeah.
Could control end up concentrated in just a few large entities, creating new forms of financial power we haven't even considered yet?
Yeah, is Ripple ultimately building the inevitable future of finance something truly better, more equitable? Or are they selling a very, very compelling dream that might not quite materialize exactly as envisioned? It's complex. So many layers. We really hope this deep dive has given you a solid foundation, some good context for your own further research, your own thinking, as this whole financial landscape keeps rapidly evolving.
Absolutely. Well, thank you so much for joining us on this deep dive today. And hey, if you found this conversation insightful, please don't forget to hit that like button, subscribe if you're not already, and maybe share it with someone else who might find it interesting. As we mentioned, your engagement really does help us out. It boosts visibility, supports the channel, lets us keep doing these explorations for you, and helps more curious minds discover these conversations. Thanks again for tuning in.